Good morning, and thank you for joining me. This is the morning market review. It's Wednesday, and it's the 19th of July. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. And of course, if you'd like to correspond with me, send an email through to that address, and I'll respond as soon as I can. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning. Good morning, Kim. Good morning, Howard. Pleasure to have you on the webinars. Thank you very much for joining. Thank you everyone for signing in this morning. It's highly appreciated. I'll just keep this on screen for a few moments longer. Okay, let's bring up our market commentaries disclaimer. All right, and just our references, Market Scope and Trading View. Let's bring up Market Scope first. Here is the cable pairing. We're looking at pound US dollar. It's moving today. There was news out of the UK, and that was inflation, CPI and core CPI, and coming in lower than expected. So surprises to the downside. We had CPI year on year coming in at 7.9%, expected to come in at 8.2%, so slight respite there. Core CPI coming in at 6.9%, with forecast was at 7.1%. And as a result, if we take a look at the daily chart, you can see that the candlestick is firmly to the downside. We were actually suggesting there's going to be a pullback here. So I just wonder if this is part of that pullback. And the reason that we suggested there's going to be a pullback is because there was an overbought, a technically overbought condition that needed a clear. And I wonder if that's going to come into a support area, and if we can exploit that. So this is now setting up quite interestingly, and we want to see if we can exploit this. Let's just go through to the US dollar, see what's happening on the US dollar side of things, and then come back to cable. Well, my system just taking its time. I'll give it another few seconds to come over. If it doesn't, we'll go through to trading view. All right, let's go to trading view. It's taking its time here. Okay, before we look at the dollar then, let's take a look at, this is the headline inflation for the UK. You can see that it's actually moderating quite nicely now. So trend line, and then take a look at this. This is quite interesting. It's accelerating to the downside. So the Bank of England hikes do seem to be coming through the transmission mechanism, and we can see that the inflation coming down. Now, let's do some analysis around the relative inflations here. So what we'll do is we'll take the UK inflation rate. We're going to divide that by the US inflation rate. The last time we did this, we were missing the latest UK data point. Well, now we've got the data point, so we can do a like-for-like type of relative strength analysis. So what we're going to do is we're going to take United Kingdom inflation rate. We're going to divide that by the code USIRYY, which is the US, the United States inflation rate, and we're just going to bring that up. And you can see that there's still a relative skew here, isn't there? The UK inflation rate, although it is coming down, it does seem to be accelerating to the downside. It's still lagging quite severely the progress that's been made on the US side of things. So we can see that the um, relative strength chart between the two inflation rates moving in that northeasterly direction. Okay, let's carry on with this type of analysis. Let's just take a look and see what's happening with the 2-year notes. So we'll take a look at the gilt side minus the US 2-year note, and let's just see what's happening with the spreads there. So we can see that. Just before we do that, I just want to reiterate the point. UK inflation is outpacing US inflation, even though they're both coming down. It's coming down at a decelerated pace in comparative terms to the US inflation rate. Now what we'll do is we'll go to GB02 year. So we're looking now at the 2-year government bond yield. Let's just bring that up. I'm going to go through to the weekly. Okay, and you can see it is starting to come down somewhat. Just before we take a look at the spread, let's just add an RSI onto this just to see how frothy it was. Let's bring up the indicators just for interest's sake. We'll bring up the RSI. And it's interesting because the 2-year gilt, the yield was overbought. So it's coming down now as well. So these pullbacks seem to be a technical correction. We haven't quite moved away from the fact that there is a skew on the UK inflation side. So we've got the overbought condition coming down. Let's get rid of that. Let's now go GB02Y. So that's the UK 2-year note minus the US O2Y. Let's bring that in. All right. And you can see, let's actually add the RSI here as well. So we're taking a look to see how frothy the spread was. Again, so there was froth here, and it had to normalize. Typically, the RSI does a really good job of looking at outliers in terms of overbought, oversold. And here we can see there's some sort of correction. Now, given that there's been a correction in the spread, it makes sense that there would be a correction in the cable Forex pair. So what we can do is we can just put in GBP USD, bring that in underneath, and we can see we've still got this upward move, don't we? Let's just change the color there. So the fact of the matter is, it seems to me there are technical pullbacks here. On a fundamental basis, I'm not sure that we've got away from the fact that there is still a severe skew on that UK side. I think the fact of the matter is the next rate cut won't be 50 base. I beg your pardon, the rate hike. My mistake there. The next rate hike won't be 50 basis points, will be 25 basis points. But I still think the market suggesting a relative hawkishness, Bank of England over the Federal Reserve. So let's go back to market scope. Let's take a look at that US dollar analysis. So US dollar, we have seen the lower peak followed by the lower trough. Go through to the daily chart. The daily chart here also clearing and oversold. Okay, and I think what's potentially happening here is we have a pullback, and if we have a pullback, the idea is, can we take advantage of that pullback? In other words, is it a rally in a downtrend? It seems that way. Are we able to find some sort of short? Now, the way that we would typically look at that is would go down to an hourly chart, and the hourly chart is where the timing is going to take place. And what we can do is we can look at resistance areas here and the interplay of indicators with the resistance areas. So it's pushed all the way up to R2. Guess what's happening at R2? Resistance coming in. Okay, resistance coming in on the US dollar. It would be very interesting to see if the EMAs cross to the downside. Stochastic would be interesting if it slips from its upper quintile, because those overbought conditions have effectively um, uh, normalized, and we want to see if we get a pushback towards the lower quintile. That's on the dollar side. Let's take a look at this on cable side. Remember, if dollar coming down, if dollar pushing up into resistance, we want to see if cable coming down into a support area. Let's go back here to pound US dollar and let's take a look. All right, I beg your pardon, just give the system a few seconds here just to recalibrate. I'll give it another 5 seconds and yeah, that's fine. Okay, so here it is. Let's get rid of all the lines. Here it's pushed back, or let's say it's pulled back to S2, some sort of support coming in. All right, now we've got a weekly uptrend, higher trough, higher peak, higher trough, higher peak. We've got a weekly stochastic that is in the upper quintile. We've got a daily chart that is in zone 1, and the overbought condition has cleared. What our next step is to see if there is some sort of support that comes in, and if it comes in, can we get some sort of push up? So in other words, it's the dips in the uptrend that are compelling. It's the rallies in the downtrend that are compelling. So we want to keep an eye on this. There's no doubt that the CPI numbers have moved the pound. That's because I think there's a repricing in terms of, well, the interest rate won't be a 50 basis point hike, it will be a 25 basis point hike, fine. But we've seen on a fundamental basis, there's still a skew on the UK side of inflation. So I think there is a potential opportunity, and we can potentially put this on our watch list. Let's take a look at the euro, see what's happening on the euro side of things. Okay, and what we have here on the euro is higher trough followed by a higher peak, a little bit of red coming in. The question is that red a dip in an uptrend we can take advantage of? Go through to the daily chart, and again, what's interesting here is the fact that we are in zone 1, okay? Over the last 3 trading sessions into today, we've had a cap, we've had a price cap on euro. But the reason it looks like we've had a price cap on euro, we've got this overbought condition. So I think this overbought condition here is starting to show some signs of normalization. If it's starting to show some signs of normalization, and if we've got a primary trend up, let's go down to the hourly chart. Once we go down to the hourly chart, we can take a look at the support levels. Well, the obvious support here comes in at S1. Take a look at stochastics. Stochastics are already diverging upwards. By the way, when George Lane determined the stochastic, his primary signal was divergence. There was no real overbought, oversold. That's not what he designed it. He designed it for divergence. And sort of the idea here is, well, there's an S1 support coming in. Do we get the EMAs to cross to the upside. If we get the EMAs to cross to the upside, then we are synchronizing with zone 1. Well, zone 1 will be synchronizing with the fact that there is a higher trough followed by a higher peak. I want to do a gold analysis again. My gold analysis has changed slightly, and I think that you'll find it quite interesting. Again, it hinges on the fact, okay, the gold analysis hinges on the fact that the dollar, so we're just looking at the dollar first, that the dollar is in downtrend. And the reason that we're looking at dollar is because gold generally trends opposite to the US dollar. So if the US dollar is trending down, we would expect gold to perhaps be trending up. And the question is, well, is it? Let's bring up gold. Okay, so let's just clear all of these out, and we'll start this analysis from the beginning. Okay. Let's just take a look at it on a price-only basis. So what we can do here is we can put in our peaks and troughs, and it gets quite tricky. So here is our reference trough. Here is our reference peak. Okay. Once we've got the references in, we've got the higher trough here. We've got the higher peak here. So at this point, it looks as if there is an uptrend. I'm going to go down here, bringing the next higher trough, and I'm going to put the next higher peak here. And what I think is happening, is we've actually got a pullback here in terms of a wedge. I think this, rather than its own individual peaks and troughs, the fact that the dollar is trending down, it makes sense then that the gold price is pulling back in some sort of pattern, and this would be the higher trough here. And I just wonder if this is the correct interpretation. Now, if this is the correct interpretation, what we can do is we can do a measured move. And a measured move is you take the flagpole, so to speak, and you extend it out from the breakout, and then we get a target of about 2,200. So I think that gold potentially finishes the year quite strong. And if the gold is finishing the year on a strong note, then we would need to watch the US dollar, because the dollar would need to show further weakness. So that's an interesting way just to look at the precious metal going into the final 6 months of 2023. All right, we do have the crypto minute coming up right now. So what we'll do is we'll conclude at this point. Just before we conclude, I'll take any final questions. If there's any questions, please go ahead and type those in. I'll wait about 10 seconds and then we'll conclude and go through to the crypto minute. Okay, good. Let's wrap up here, guys. Thank you very much for joining me, and I wish you all a good day, good evening ahead. We'll chat tomorrow.